How are our property markets going? Well, if you believe the clickbait headlines, we're in a lot of trouble. But if you look behind them at the facts, maybe the markets aren't as bad as all that after all. And that's what we discuss in today's Property Insider video. We have a talk about the Queensland land tax backflip, immigration, inflation, auction clearance rates, and what's really happening on the ground in our property markets. If you're wanting to keep up to date with what's happening, please subscribe to our YouTube channel and click the little bell icon so we can inform you each time a new show comes out. How are our property markets going? Not too bad, it seems, when you look at the facts, when you look behind the clickbait media headline. Now, there's no doubt that property prices are still falling around Australia, but it seems that the rate of decline seems to be easing after we had some significant falls over the last quarter. And despite rising interest rates, the latest statistics from the Australian Bureau of Statistics show that consumer confidence is rising and consumer spending is continuing strong. Oh, by the way, that's not good for inflation. And there's also been lots of property news this week, including the Queensland government's backflip on its controversial land tax grab. The first monthly CPI figures are out, and we now know what's happening to immigration over the last year, and our auction markets are giving us a clear signal of what's happening on the ground. So I'm looking forward to this week's Property Insider chat with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yes, good day, Michael, and has been a busy week, and we've got through the first month of the spring selling season, and I think we could feel pretty reasonable that we've started the season on the front foot. Certainly the portents are a lot more positive going forward now than we've had for some time.
Yes. Well, the big news last week was that the Queensland government did a backflip. There was a lot of backlash around the government's proposed, well, actually it was more than the proposed land tax policy because it was actually legislated but meant to come into effect in the middle of 2023. But Queensland was going to calculate land tax on property holders based on the value of all the property you owned around Australia rather than just in the Sunshine State. But despite it already having been legislated, the government's now dumping it, Andrew.
Yes, Michael. Well, that's a little embarrassing, isn't it? I guess there's a couple of issues here. Firstly, we have spent like drunken sailors through COVID, which is fair enough. But now we've got to pay the price, not just with higher inflation, which is being generated with all that spending, but also balance sheets have to be recovered. That means governments are looking at their tax mix to try to improve their balance sheets. But, and of course, I guess there's a sense that let's try to increase the take from those who can most afford to pay it. And therefore, the property owners, investors become the key targets. But these things, of course, tend to, unfortunately, not get the sort of forethought that they should get, in my opinion. Thankfully, the legislation, as you said, has been put to one side because given the shortage we have of property, particularly in all capital cities, but Brisbane has got a chronic shortage of rental properties. Providing tax disincentives for more properties just doesn't make sense at all, Michael. And at the end of the day, unfortunately, one way or the other, poor old tenant will end up paying the bill.
You're right. So while the government seems to see property investors as an ATM, they've realised it's not going to work. Look, maybe something good will come out of this short-lived plan, Andrew. At least it's rekindled the debate about reforming the rest of Australia's unfit for purpose tax system.
Yeah, look, I'm not sure that our problems, particularly in the property market, are on the demand side. We've got a booming economy, and yet we don't have enough houses to house our population. And we're on the verge of an absolute remarkable surge in migration. So where are we going to house them? So I don't think it's about trying to manipulate demand. It's about improving supply. And that just seems to be too hard for governments for some reason, Michael.
You're right. Well, you would talk about immigration. So maybe we should just also mention that recently the Australian Bureau of Statistics has given us the figures for the year to March 2022. And people are coming back to Australia with international borders now opening. Interestingly, a lot of students are coming back, and in July, in fact, student visa numbers were at record levels again. In particular, students don't buy accommodation, they rent, and in particular, they rent in our big capital cities, Melbourne and Sydney, in the CBD or near the universities. But there's no accommodation for them, Andrew.
No, Michael, that'll just mean higher rents. And in fact, the migration numbers, Michael, were quite remarkable. I mean, we expected with open borders to be some changes and with the easing of the COVID issues, but it was a very sharp turnaround over the March quarter. We saw a sort of a twin variables of international migration and interstate migration, really tracking as we thought they would. But I don't think anybody expected them to be as sharp in terms of the turnaround. We had an absolute surge in net international migration in New South Wales and Victoria. In fact, the number over the quarter trebled into Victoria and was well over double into New South Wales of international migrants. We saw interstate migration, net interstate migration, also having a remarkable turnaround. Now, it was still negative in New South Wales and Victoria, but the level of decline was significantly less than the net migration losses over the December quarter, Michael. And when we look at Queensland, we saw that the net increase in net migration had fallen significantly as well. So that's telling us, what we know is that there was a surge in southern state migration into Queensland through the COVID period. Obviously, there was those COVID refugees that were looking for a perceived safe haven up into Queensland from New South Wales and Victoria. Well, that's certainly ended now, even though there's still growth into Queensland. It is higher than what we would understand to be normal levels. It's well below where it was over the previous quarters. And I think that shows that that's the end of that COVID migration rush. So things are normalising very, very quickly, Michael, which means that we're going to put our housing markets under stress, particularly in Sydney and Melbourne. And I think Melbourne is set to be the beneficiary of surging migration. I think also what it shows, the sharp decline in net interstate migration into Queensland, even though it's still positive, is why we're seeing some easing in the Brisbane housing market and the Gold Coast housing markets as well, because we haven't got those cashed up interstaters coming in, securing property in southeast Queensland. But maybe part of what we're seeing with the resilient Melbourne market through spring so far, and also the Sydney market holding up, is a factor generated from those sharp increases in international migration. And of course, this is March quarter data, Michael. So we're into October now. So we've still got a lot to come. And as you mentioned, international students, which I think is a good sign that international students are returning in waves, because perhaps there was a sense that with the Zoom environment that there might be more offshore student participation rather than onshore student participation, and also the issues with China's heavy lockdown from COVID. But, student numbers are churning over again quite nicely at this stage in Australia, which is important for our economy. But again, we are confronted with a shortage of housing.
Another set of data that came out over the last week from the Bureau of Statistics was about retail spending. And despite cost of living pressures, despite interest rates and mortgages going up, we're still spending at the shops. Retail spending was very high over the month of August. And in particular, there was food-related spending. Non-food-related spending, household goods, was a little bit mixed. But it seems like we're going out enjoying ourselves, Andrew.
Yeah, I'm not so sure that's a good news story, Michael. I think that the more we spend, that will only fuel inflation going forward. So it shows we have a booming economy. We know we have a booming economy with the low unemployment rates. But the question is, are we fueling more inflation, which will only put upward pressure on interest rates? We've sort of escaped what the US and the UK and Europe have unfortunately been experiencing recently, and that's the surge in inflation into the service sector. But the more we spend, the more that's likely to happen. So far, our wages are holding reasonably well, but the more prices rise, the more energy there will be for those seeking wage increases, and the more political pressure will go on governments to try to fix that up. But, we've still got high savings levels, Michael. They have certainly decreased significantly over the past few months. But so I guess we're still using our savings to get ahead, even in the face of higher prices.
Well, talking about inflation, I guess we're all waiting to see what the CPI figures are, and we're not going to find out for the third quarter of the year till the 26th of October, when the ABS is going to give the quarterly figures. and their new monthly figures as well. But they had a bit of a media release a couple of days ago looking at what the monthly figures were. The first time they've mentioned monthly figures in July, where the annual rate of inflation was 7% and August 6.8%. It's a little bit backward looking now, but they're starting to get ready to give us monthly as well as quarterly figures, Andrew.
Well, I guess the interesting thing for the Reserve Bank will be, do they ignore what's been released with the August and July numbers, with the sort of the pilot scheme from the ABS, and just look at what's happened over September when that data is released? Now, I would expect the September data to be a significant improvement on the July and August data, which certainly showed headline inflation was higher than we had over the June quarter. But we've had a very sharp decline in the cost of oil. We also see house building costs have also started to, although they're still increasing, the rate of increase is not as high as it was. But with the September monthly data will come out in 3 weeks' time. Even though that's good, we've now got a monthly data set, we're still lagging the timeliness that other similar advanced economies have. They almost get that out on the month, at the end of the month, their inflation data. And we've got to understand that our next Reserve Bank meeting won't be till November. So it'll be using the September data, which comes out in a few weeks' time, to work out what it's going to do for its November decision. And the horses have bolted. Who knows what oil would have done by then? It's just still, I don't think, acceptable, the data that the Reserve Bank is relying on from the ABS, even though they've changed now, thankfully, to monthly data. It still has this lag, Michael, which other countries don't have. And I think that's a serious question we've got to ask, particularly given we are in this sort of flux environment in terms of where interest rates are now, where they're going. I think we need to have policymakers having their finger on the pulse rather than be looking back a month to figure out and then make settings that affect everybody in real time, which interest rates do, of course.
We'll talk about finger on the pulse. We like looking at the auction clearance rates because they give us a better indication of what's happening on the ground. And the markets have been distracted the last couple of weekends. This weekend, there's school holidays, a long weekend in large parts of Australia. The previous weekend, there was the AFL Grand Final. I don't know if anyone really cared about the Grand Final this Sunday. Well, maybe some interstate people did. Yeah. So what happened to the auction markets over the weekend, Andrew?
Well, it's a bit of a same old compared to the previous weekend, Michael. We had distracted markets, but it didn't really affect clearance rates. They just sort of continued to move. We've seen a very sort of resilient, rather than robust, but certainly resilient early spring market in our auction markets. Melbourne and Sydney really continue to hover in the mid 60%. Melbourne was a little bit lower on its return at the weekend, but I think that was a school holiday scenario, end of school holidays, of course, in Victoria now. But we did see fewer auctions in those higher priced inner suburban areas in Melbourne. But nonetheless, the clearance rate was still pushing up towards 65% in Melbourne. Sydney was the opposite in a sense. It had certainly well below its numbers, the previous Super Saturday numbers, because it is the Labor Day long weekend in New South Wales. But again, a reasonable clearance rate above 60% for a holiday weekend, Michael. And again, we saw that the middle and top end of town was where we had fewer properties auctioned. So it was another pause environment. Brisbane picked up, lower listings in Brisbane, but again, distracted market, but their clearance rate picked up. Adelaide back in town with another high clearance rate, that 80% plus clearance rate, which we're used to in Adelaide, with a rebound in auction numbers. And Canberra only had a handful of auctions. So we can sort of discount to some degree, as we did with Sydney, the clearance rate, given the holiday distractions. But at the end of the day, the house price numbers are validating what we've been saying now for a little bit of time. And I don't want to say I told you so yet, but auction markets have clearly stabilised and improved into spring. We're out of the winter, I guess, freeze of the market. You said spending levels are rising, low unemployment, booming economy, and people are out there now shrugging off all the negativity and getting on with buying and selling property, Michael. So it's been, I think, a very positive start given the circumstances to the spring selling season. And it would have, I guess, knocked again back a lot of those doomsayers who were predicting, the end of the world as we know it in property markets, that markets have been quite steady and quite resilient, even, with these unprecedented increases in interest rates.
That's interesting, Andrew, because Everyone knows interest rates are going to keep going up a little bit more. We just don't know how much. I think buyers are starting to just factor that in and
Yes.
just moving on with their lives, knowing interest rates are going to go up. So I just got to make my decisions and move.
And it's a booming economy, Michael. This is the whole point. If we had higher unemployment and we weren't coming from this position where we've got very strong asset base and high levels of savings, I think that would be a different story. But the fundamentals for the households is still very positive here. I mean, we have this record low unemployment rate, wages are rising, high savings levels are still there to sustain us, and people are getting on with the business. And at the end of the day, our interest rates, although they have risen sharply, they've risen sharply from zero, and they're still below long-term levels, Michael. And we are in this country well positioned, certainly better positioned than other similar economies to come out of the inflation negatives in reasonable shape. Now, the future is obviously still highly uncertain, but going forward now, as I said, I think that we're certainly in a better position now than we were in similar circumstances back in 2018, Michael, when we had a market shakeout where confidence was low. And as you suggested, I think people are just getting on with business and accepting that this is just the price we pay for all that stimulus that we had through COVID.
Well, although house prices are likely to continue to fall, it seems to be that they're now looking for a bottom,
Yes.
and they could well bottom out over this last quarter of the year, Andrew.
Yes, exactly, Michael. We've certainly been, I guess, suggesting that was a possibility for the last week or last few weeks, last month or so. But clearly the declines have been easing. And also those auction clearance rates, again, give us a very reliable weekly source of reliable information on the direction of the housing markets.
Well, it's been a busy week in property news, so I look forward to our next week's Property Insider chat when I know that you're going to have your rental figures for the month. I wonder what that's going to show. Catch up with you next week, Andrew.
Thanks, Michael.